Well, thank you for joining us at this webinar today. As you can tell, it's sponsored by our friends at EXL. Turning data into dollars is the conversation that we have today. Thank you for joining us. Joining us in the session as panelists today, we have the irascible Jim Marous. Jim is the CEO of the Digital Banking Report. He's also the host of Banking Transformed and co-publisher of the Financial Brand. I'm sure he needs no introduction, as he's very well known to the crowd that's joining us today. We also have joining us Lindsay Ogan, Chief Marketing Officer for Stride Bank, Corey LeBlanc, who's the co-founder and the COO and CTO of Locality Bank, a new challenger in the space, Becky Reed, Chief Operating Officer at Bank Social and the CEO and founder of Brass. Is that how you say it, Becky?
Brass it is.
Brass it is. And of course, joining us from EXL is Vikas Sharma. He's the Senior VP at EXL. So thank you all for joining it. Now, we're going to be talking about data as a strategic asset today. And so, when we talk about data as a strategic asset, it may sound fairly, innocuous, like this is talked about a lot, but, I don't think we realize necessarily the extent to which the amount of data that we have to use in decision making today has completely changed just over the last 10 or 20 years. The ability to extract data, minute data on behavioral elements of customer behavior, particularly when it comes to financial behavior and so forth, has never been, we've never had the ability we have today. I saw some great numbers around this recently, is that latest estimates are that every day, 330 million terabytes of data are created every day. That accounts to 120 zettabytes per year, which is, in any year today, we produce more data than historically was produced in, certainly in our lifetimes, if not much greater. If you take all of the books of the world, about 175 million books, that equates to 175 terabytes of storage to store all the books that have ever been written throughout human history. And we're talking about 20 million times that every day in terms of the amount of data that is created. So that's why we're having this conversation. How do we take all of that incredible amounts of data and turn that into economic advantage for our community banks and credit unions? So thank you for joining us today. We will be happy to take your questions during the presentation. You don't need to wait till the end. If you've got a question for a panelist specifically, please do that in the Q&A, direct it to that panelist directly. But I thought what we could do to start off the discussion, when we talk about digitization of credit assets and deposits, it's obviously even accelerated since the pandemic at an unprecedented pace. Community financial institutions, big and small, find themselves now having to compete with larger banks and fintechs as consumers evaluate and choose the best options or offers available to them. And one of the key impacts has been increased usage of data to drive decisioning at community FIs. So we want to talk about how community banks and credit unions are leveraging data. That's why we've created the panel we have, specifically around top line and bottom line growth, and also discuss how data-driven decisioning is creating these extraordinary opportunities for value for customers across the customer or member lifestyle. What's the maturity of the current processes that are there, the challenges, and talk about the road ahead and how the team that's on today are dealing with this. But I want to start with Jim first. Jim, you're widely considered one of the foremost experts and influencers in retail banking in the United States, so we're grateful to have you on. But you're also the creator of the Digital Banking Report. and you're obviously working on a lot of data-driven stuff in all aspects of your career. So how, what is the state of play in respect to, the larger banks in this space versus the community banks and credit unions in terms of what the data is telling you about the activity in the industry itself?
Thanks, Brett. I appreciate being on the webinar today. It's interesting. We've just completed 3 brand new studies. One is on financial marketing and the use of data towards driving financial engagement. The other one is on digital banking maturity, which is a broader perspective beyond the data aspect. And the third one is financial trends and predictions and priorities. And it's interesting because they all align really well with each other as to where the financial services industry is today with respect to collecting and leveraging data. Data is no, stranger to the financial services industry. I've been in banking over 40 years, and data was important then, but it's how we're using data that has changed so much. And I use a comment a lot of times when I'm presenting that we've got to move from using data for great reports to moving them to being extraordinary experiences. And I think the challenge right now is that financial institutions still are collecting a lot of data and insights. They're even building great tools to know who their customers are. The biggest challenge is actually deploying solutions against that knowledge. And it doesn't matter what size organization. We're seeing in our most recent studies, we found that organizations today, less than 30% have the ability to do an action against a data point. So in other words, what we're talking about is a trigger. In fact, many financial institutions still aren't collecting the data that can drive triggers. I use in examples quite a bit that whenever you test drive an auto, you're about to buy an auto, you test drive an auto, you get a credit bureau run against you, but not a full credit bureau, but you get a ping that basically says you're at a car dealership. The number of financial institutions that use that type of data to actually engage with a customer around the possibility of maybe getting a discounted loan rate or a car loan rate of any sort is minimal. And it's frightening to a degree because we know the data is out there. We know the power of data. There's no lack of knowledge as to how important it is. But when we do analysis around what's the importance is the highest level of any importance they have in the industry right now. When we talk about the investment against data and insights and processing data, it is very low. What's even more disturbing is on a self-analytical basis, financial institutions now, over 60% of financial institutions rate themselves as not adept at leveraging data for engagement. So, while we talk about it a lot, the deployment about this across all asset categories, by the way, is really suffering. And what is interesting, to your point, Brett, around, how do the smaller financial institutions compare to the larger? We find that the smallest and largest financial institutions are doing quite well. The largest because they have a lot of money to put
Interesting.
against the solution. The smallest because in many cases, the leadership has a commitment to using composable solutions to make an impact and saying we can collect data and make a direct impact on our bottom line, on our marketing efforts if we leverage it. The middle ground is the part where we really see a challenge in that organizations, partially because they're getting good financial results on a continuous basis, and it's hard to get everybody moving in the same direction. We find there's a gap. So
This
the
is
good
more the
news
mid-size and regional players.
yeah, exactly. And the good news is there are organizations such as Excel which provide composable solutions. So if I'm trying to manage data and say, I need to generate more deposits, which a lot of financial institutions are looking for right now, there's data out there that can be helped to generate those solutions on a very direct basis in a way that does not open up the whole issue of too high of rates being paid on the entire database. So, really quickly, this fact is that most organizations still find themselves to be not very digitally mature in this area. They know the challenge. It's a matter of putting resources toward it. And interestingly, instead of technology being the issue at hand, it's leadership.
Yeah. Yeah. Leadership. And you often talk about culture There's sort of a key to that. And I see it when I go and present to boards of community banks and credit unions. One of the most common responses I have to, sort of presenting the digital journey to people is, oh, I'm so glad I'm retiring next year and I don't have to worry about that. But that's not really a solution to the problem set. But a lot of people are nodding from that. So we do have a, sorry, go ahead, Corey, jump in.
No, I was going to chime in here real quick. I also think that those institutions, I agree, culture plays a big factor into this. I do agree that they have a lot of things going on, but I also think it's just that they've built all of their data into silos. They've done nothing to consolidate that data into a place where they can actually make anything from it. And so instead of taking the pieces that are probably critical to the business, I think that's where the culture, that's where the leadership problem really kind of sneaks in, is that they don't look at that incrementally and start making the changes to get to that version of ideal data cumulatively through maybe specific focus areas. And so they just kind of kick the can down the road. At least that's what I've seen a lot. And so I know, just starting a bank recently, that was one of my biggest priorities. My investors, my board, everyone was like, why do we really need this massive data warehouse? We're only going to get a couple of reports out of it to start. And our thing was, no, you start now so that as we continue to build the layers of data, whether it's be through third-party relationships, LOSs, core systems, or just external data that we can pull in that we can learn about our customers or help the loan process, help a deposit opening process without having to ask the customer to provide these things that we can go get, we'll have the foundation to do so. But I think a lot of institutions in that mid-tier, it's also very costly to start doing that. And therefore, because of their size, that's a complication.
I do wonder whether part of this is also the fact that most of those mid-size, but this is true of the smaller institutions as well, are on, rented tech stacks, and that does give some restrictions. Vikas, you had a point.
So I'm just going to, I think, agree with Jim. I think when he mentioned that there's a lot of data available, the trick is how it is getting used. So I'll give you an example. We were actually working with one of the community banks, and they had this customer relationship going back decades, right? They had a ton of data, and they were looking at all of this checking account data. What we were simply able to do was basically start leveraging this and using what we call a transaction insight solution, right? To see what might be more triggers for us to go and get back to the customer, right? Maybe they have, say, a lot of credit card debt, which we can consolidate into an installment loan. Or maybe there are other solutions that we can offer by looking at what kind of transactions they are doing. Somebody recently moved house, and they might require a certain kind of solutions. And there are other events which are happening in their life. So all of that becomes quite possible with just simply using, say, checking account data. And then I think that started creating wonders for them, because rather than doing cross-sell, which was more a campaign-based, they were able to make it much more closer to real time. They were able to make it much more hyper-personalized. And then that started creating a lot of value for them, creating a much better customer relationship for them. So I agree, Jim. I think the trick is also looking at what are the immediate places where you can start, and then what are the other things that you need to do over long term to make it more successful.
Coming back to the cultural point, Lindsay, you work with a lot of mid-sized organizations. What's the cultural issue you've observed?
Yeah, well, I feel personally victimized by Corey's very accurate description of data.
Wasn't intentional. I love you, Lynn.
No, it's very true, and I think and Jim mentioned this as well, that you at the mid-sized bank, I always say we're kind of victims of our own success, right? Because to be that mid-size, you at one point did grow to some extent. And so there's kind of this legacy mindset where we go, well, this is how I did it when I had to do it last time. And growth looks entirely different. Customer acquisition looks entirely different in this day and age. And so kind of releasing that idea that we know how to do this and that we have to go back to first principles all over again and start from square one, that can be a big cultural issue. But I also think, to Jim's point, that not only do you have legacy systems, but you have legacy people, right? And you have people that are in self-preservation mode, and they're like, maybe we need to upset the apple cart, but can you do it after I soft retire from my organization?
They haven't had a bad year.
Yeah.
They haven't had a bad year.
Absolutely. Absolutely. And they're making too much money. Absolutely. And so I think that, I've been a big preacher and proponent of the fact that, it's not evolution versus, self-preservation. Evolution is self-preservation. We have to evolve for the banks to survive, and for the banks to survive, for us to continue to work in the workforce at them. But it kind of depends on where you are in the state of your career. But I think those are absolutely things that I've seen throughout my career at various mid-sized banks that we have to fight against on a cultural basis.
What's frustrating to me though, Jim, you say they haven't had a bad year, right? Lindsay, and I bet you'll shake your head on this one though. If you look at the data though, if they actually look at the data year over year, they may not have a bad year, but they're progressively losing business that is critical to the company's growth in the future. And they have zero way of going to get it back. That's the thing that's most frustrating to me.
They're not
particularly
managing the right amount,
with the
right?
younger customer set. Yeah.
Well, not just younger. I mean, they're not looking at funds flow. So
Right.
every month, money gets deposited to their primary bank account relationships. And every month, money flows out of their institution to higher paying organizations or different types of organizations. I do a survey of every group I ever present to that says, how many of you have closed a major primary financial relationship in the last 5 years? Nobody raised their hand. How many of you have opened a secondary, tertiary financial relationship anywhere else in the last 2 years? And everybody raised their hand.
Yeah.
There's silent attrition going on that they're not measuring, because the old ways of measuring attrition were, how many accounts did I lose against how many accounts do I have in my portfolio? They're not losing them. They're just not the relationships anymore. They're an account.
But how scary is that though, Jim? If they're not even seeing the data about what they're losing, that means they're not even looking at the historical uses of data. How are we to start to have the conversation around using predictive modeling with data if they're not even looking
in the rearview mirror even?
Right.
Yeah. Now, I do want to get to Jim Perry's question in a moment as well, but Becky, I'd like to bring you in at this point. You've been a long-time credit union executive, so you've been sitting in the boardroom when these issues have come up. You're running a QSO right now. You've been a credit union CEO. From that position of leadership, what are the conversations like in the boardroom over this, and what is being missed by these executives right now?
Well, Jim spoke about leadership, and I can't emphasize enough how leadership actually drives what happens across the organization. And what Lindsay mentioned, unfortunately, about how some people want to ride out their career into retirement without doing anything hard. Don't mess up anything. I don't want the board getting upset with me. I don't, I'm not going to upset anybody. I'm just going to ride off into the sunset, while my organization continues to stay status quo. Now, that is absolutely not something that I ever have done or would do. But when you're dealing with a smaller organization that has limited resources, and you have a lot of technology options that you can choose, and you certainly can't spend money on all of them. Data is one of those things that certainly in the past, to Corey's point, has been held hostage to some degree by the core providers that provide software to credit unions and community banks.
Yeah, that's true.
And it often makes it cost prohibitive in order to extract that data in order to do anything meaningful with it. Then once you do extract it, yes, it's distracting to extract it. Then what the heck do you do with it? And let's go back to from a consumer perspective. Let's talk about consumers. And Brian Claggett, one of our attendees, posted on LinkedIn this morning, which I commented on. And he was talking about an experience he had with his bank. I believe it was his community bank that he'd been a customer of for many, many years, that had gone through multiple M&A acquisitions and changed brands and so on. Today's consumer expects any organization that we do business with to understand us. And we expect the experience to be like Apple. We expect it to be like Amazon. We expect it to be like Netflix, right? So those organizations use data to present to me a very customized and specialized experience. And we as consumers, certainly on the lower end of the spectrum as well, I mean younger when I say lower, we expect that our financial institution that has every piece of data that you could possibly imagine under the sun should be able to know when I'm about to leave, right? And they should reach out to me and say, what's happening? Why did your direct deposit stop? Why is your ACH payment going to pay Ford Motor Credit instead of my financial institution? Why have you stopped writing so many checks? Why are you not using your debit card as much as, I mean, all
This is
of
pretty
this
basic data, right? Yeah.
it is. It's there. But what Brian posted this morning was interesting because the frictionless experience that he had with technology, and again, this organization chose to spend money this way as opposed to spending money the other way with the predictive analytics and reaching out from a relationship perspective. It was super easy for him to close his account via chat. Okay, done, over,
Yeah.
it 5 minutes. But to his point, he was like, that was super easy, but you didn't notice all of these other things that could have saved the relationship months or even years ago. And to me, that's an example of competing priorities in an organization and where we spend our technology dollars, which is a leadership issue.
Yeah. Yeah. No, there's a good question from EJ Kritz here. Banks assume a core DDA represents a customer who considers that bank to be their primary financial institution. But when we survey banks or credit unions customer base, it tends to be closer to a third of households that actually think the same way. So, I mean, this is, Jim, what you were talking about is that, and Becky, what you were talking about as well, is the data is fairly clear when a customer is not using your bank as the primary financial institution, and yet the responsiveness to that situation appears on the whole fairly poor. Why is that, Jim? Is it that they don't have the systems to pull the data, or they're just not someone who's responsible for interpreting that data?
Interesting. I'll go to both Lindsay and Corey's and Becky's comments in that we look at things in the legacy way. I mean, my son, his primary financial relationship is Venmo. He's got a Venmo card. He's got a Venmo interaction of payments. And for more and more younger consumers, the payment function is actually the core relationship, which when you think about it, and I'm calling payments in a credit or debit scenario, when we think about it, that's still the same as it's always been. It's just that we used to write checks to do those things. We no longer do those in most cases. And so what we have a scenario where in some cases now the primary relationship is where I'm doing the most transactions. For me on the business side is PayPal. My business account only sees PayPal inflows and outflows and direct deposits of funds that I've earned. That is it. They don't see any interaction on a one-to-one basis. That is why PayPal on a regular basis offers me bridge lines of credit that I can get instantly at a decent rate. If I want to go to my primary financial relationship for that same product, it would take about 14 days, if I'm lucky, for disbursements, because the actual application process takes multiple days. It can't be done digitally. The credit adjudication takes more than a week. And then there's even a delay in disbursement of funds. By that time, I don't need the money. And as Becky mentioned, as consumers, just think about everything that happens automatically. You mentioned Netflix. I have Hulu down here. It's a very different relationship with Hulu than with DirecTV, which I have in our place up north, in that Hulu determines what I'm going to probably want to watch next. While DirecTV, I have to push buttons to make sure I record what I want to see. The same thing happens with Amazon, everything else. And a lot of it happens so behind the scenes, we take it for granted. So when the financial institution doesn't realize, as with Brian's example, that he's taking money out, or in my example that I wrote about to his post, that I had a mortgage that they never offered me a lower rate until I was leaving to go consolidate my lending to someplace else. And yet we all talk a good game about wanting to care about the customer. And yet at the end of the day, we're not using basic data points to move the relation forward. And now it's no longer experiences. It's about engagement. It's about, where am I getting the dialogue going? You know,
Yeah.
it's no longer about, it's never it's no longer a 2-point thing. It's an overarching relation thing, which is really, Corey, I think where your new company came in existence for, was to build better engagement.
Let's get into that. So
doing the transactions.
Yeah. So Locality Bank, Corey, you know, this is, you've been already quite successful in the South Florida region, but you had to build this up from, you know, the ground up. But what are you doing differently from a traditional community bank when it comes to data?
Yeah, so from the data standpoint, right, same thing we're doing really on the digital banking side, same thing we're doing on the core banking side, is we're building a foundation to support the future growth of the company. We're investing in the future more than we're looking at the day-to-day, month-by-month cost of things. And we're seeing positive results, because I'll take you one layer up, even simpler, Jim, in data that we're not looking at, right? Cassie just shared Cassie, my wife, for anyone who doesn't know, but who's way smarter than me in any of this stuff. Like, she teaches me most of the things, but she shares with me this Financial Brand article this morning. And I was looking at it and I thought it was funny, because it shows like 97% maintain a separate business account versus their personal accounts. Great. They should, right? But what I thought was fascinating in the article is it starts really digging into, you know, how many institutions does a customer typically work with? Is it 1? Is it 2? Is it 3? But the one that I thought was super fascinating and simple, right, that and what Locality very easily looks at and markets to and has conversations with both digitally and physically, is it said 56%, only 56% keep an account on their consumer and their business side at the same institution.
Yeah, yeah.
How insane is that? That's a simple conversation. You have a relationship with this customer in this one segment. How can you not have that conversation about the other, right? And so for us, that's what's critical, right? Is we're looking at, how do we utilize not just the data that sits in core. I agree with everything that everyone was saying about the, you know, the legacy cores and all this stuff. I mean, they're probably not my biggest fan either at this point, but sure, they lock a lot of that stuff in, but there's also a lot of data that we have access to that we just don't use, right? So just talking about commercial onboarding, for example, that's something that we're really heavily investing in. We're working on even reinventing that commercial onboarding process from day one. So we've only been in business for 2 years, and we're literally reinventing the entire process to try to improve it. Because what we realize is we made a really simple application. Customers can go put all their information in, they can open up a bank account. But what we didn't consider is, even though it only takes 10 minutes, the customer may not have all the documents needed. They may not be able to fill out all the information. They may need to pass that application on to somebody else. And so today, about 90+% of the applications that come into Locality from the commercial side go through some form of hybrid white glove, which means we are physically having to work with these customers to get some of this information. So what we're looking at doing, right, is taking data from known sources like SunBiz and some of these other registries, where we can pull data and some of this documents for the customer. We complete our KYC, we get to know who the customer is, and then we go do the work from them by pulling from data sources.
Right. So you're not asking them to jump through all these hoops to prove themselves worthy to be your customer. You're going to them and saying, we know what enough that we need to know about you to engage you in this way to give you value.
Right, exactly. And this is how I got to know the Excel guys, is because of these conversations, as we started to realize, okay, well, if simple isn't simple enough, how do we be proactive and do the work for them? And that's where we start to say, how do we get more insightful? How do we start to pull from more data sources and pull those things? But again, it all comes back down. For me, I'm an infrastructure architecture guy. I'm a banker by association. At this point, I guess I can kind of call myself a banker after all these years. But I'm a data and architecture guy. So
you're a complete banker, Corey.
All right, I'll take it. But I believe in building systems and workflows and architecture in a way that supports change and growth iteratively. And I think that's very, very important.
You know, when you look at the fairly basic opportunities you've outlined, I would say there are two other really clear opportunities right now. One is bringing on these younger, customers, that are data, driven, or at least digitally native. And then there is the issue of wealth transfer. We're starting to see this massive wealth transfer underway, from one generation to the next. And if you're not tracking that data, I hear a lot from community banks and credit unions that they don't really care about these younger millennials and Gen Zs because they've got all this incredible, wealth from, the boomers and the Gen X that is there. So, they're protected by that to some extent. But Lindsay, what's your thought in respect to the risk of those big deposits leaving?
Yeah, well, I think that we're seeing this deposit drain and competition for deposits in the rate environment, almost masking the actual drain of losing market share and customer acquisition. And I know everybody loves to quote Ron Shevlin's Forbes article about the checking account wars and the neobanks and the digital banks are winning. And I have either it's equally thrilling and horrifying for me at Stride Bank, in a mid-sized community bank that has a bunch of fintech partnerships with like Chime and DoorDash and Lyft, because I've got a front seat to how good they are at what they do and how they are changing customer expectations for the rest of us. And, kind of to one of Corey's points earlier, that community institutions especially have been asleep at the wheel with data. As long as nobody moved on it, then nobody had to, because the competition was a level playing field. But then the neobanks came in and they said, hey, we don't have, if we have this 7-layer cake, we're not going to eat it one layer at a time. We're just going to take a sliver of it. We're just going to take this one customer segment and we're going to laser focus on them. And we're going to show them what a fully integrated omni-channel predictive analytics experience feels like and looks like. And then we're just going to spoil them rotten to where they don't even want to, like Jim was talking about, they don't even want to really deal with banks, and they don't even see banks as their primary financial relationship. And right. They go, and I know, Brett, you're a big first principles guy, and they're going back to first principles. They're shedding this idea of the legacy banking system, and you're supposed to have a checking account, you're supposed to do this. They're going back to, how do I move money? I've got money, I want to send it to you, vice versa. How do I move that? And neobanks and fintechs are stepping into that space and delivering really targeted experiences that blow us out of the water, because the community banks are coming from a space where we're trying to be everything to everyone.
Yeah.
And so that is where we have to compete for the in terms of the wealth transfer, is that that's a generational piece, and these are not just digital natives, Gen Z and the coming up generations, but all their iPhone, the iPhone was here when they were born. And so their worldview is entirely different than ours. And so we have to be prepared to meet them where they are in the digital world and in the digital space. And that requires a whole lot of paradigm shifting and talent management and systems and technology and all of that kind of stuff. And those are big investments that, as you start to untangle them, you step on more and more, you find more Legos to step on, as you go down the road. And it's just, if community banks and financial institutions are going to continue to compete in that environment for those customers that the wealth will eventually transfer to, we have to be persistent.
Yeah, sure. So thank you, Lindsay, for jumping in there. I do want to address Michael Goswick. He's come up here, and this gets into the execution side of it. So maybe Becky, you might want to jump in here, or Vikas. When we're talking about moving to sort of a data first approach or culture, where do you start? Do you start, with data structure? Do you start with sort of the rails from the legacy system? Because the legacy system, obviously is a limitation here. Where, if someone's on this webinar today and saying, look, I appreciate everything you're saying here, but I just don't know where to start from a technical aspect, what would be the answer? Becky, you want to kick us off?
Absolutely. It starts with a question. And that is all you need to do to start. We tend to get all worked up about the technology and the data and the C word that I can't stand, which is can't. Why we can't. We just talked about, there are some legacy core database systems that don't give you access to everything. I don't have a data analyst, on staff that I can use to look at all this data. I don't have my data in a data warehouse that's homogenized in a way that I can, query it easily. None of that stuff matters. All you need to do is start with a question. Why am I losing more members? I'm from a credit union background. We call our customers members because they're owners. So why am I losing members? So that can lead to the next question. Well, how many members am I losing? And what is that? Is it just the fact that I'm at more closing accounts than are coming in? Or what is that? Then you drill down further. Well, what do the people look like? What do they have in common? Is it age? Is it, where they work? Is it where they live? Okay, how long have they been a member of the credit union? So it starts with a question. And most of the time, all of us have enough data to start to answer those questions. So then when you kind of
they don't even need to. The reality is you have so many third-party partners, Excel, that will help you. If you have a one-person organization, nobody does, but if you had a one-person organization and you have those questions, there are so many third-party providers out there that will help you with those questions and deliver the answers to you in a fast, efficient, much lower cost process than was ever possible before. And you don't have to unwind. This is why the small banks are doing so amazing right now, is because they don't have the core providers standing in their way. And the reason why they don't, they said, we are going to commit to finding the answer outside of the core provider. They're not getting rid of the core provider. They're running duplicates. They realize that lowest hanging
but
fruit.
it's because they're more sensitive, those changes Becky's talking about, right?
Yeah.
They can see the members going out. They can see the fact they're not picking up the younger
And they'll take
customers, right? Whereas the bigger or the mid-size and the regionals, as you're saying, they're like, well, we still had a pretty good year. Yeah, we may be not taking on
or it's going to go 5 layers to get somebody to take action. The reality is most of these small organizations say, you know what, we'll engage with a provider that provides a better communication system, provides a better database system, provides a better, generation of new account system that will use our data and show us where our weaknesses are.
Yeah.
And Brett, I couldn't agree more with Becky and Jim here. We see at a lot of large banks also, right? We used to hear about these data lake projects, which would go on for years and then still they would not be where they wanted to be. Right? And I think it's very important to understand what are the biggest problems that you are trying to solve. And then I think the path becomes way more easier. Then you can understand where the data is, what will processing needs to happen, how it would fit into your operation processes. And that's a better way to solve the problem rather than trying to get everything together, because that endpoint will never be reached.
Yeah, no, I hear that. One of the Vikas, one of the areas that you and your team are frequently asked to help with is the area of fraud management. So, how is a good sort of data architecture really important from the fraud perspective?
No, I think that's a great question, Brett. And fraud is increasing overall, right? Especially in the pandemic, we saw a big increase in that. It is still hasn't come down that drastically. And I think the challenge with fraud, and especially those of you on the call who deal with fraud, it's always an ever-evolving field, right? New kind of fraud patterns emerge, and then you have to go and start getting ready for it. I think Few things I think which we have seen working well for our clients is one, keep an eye on what kind of patterns are emerging, right? So for example, when you look at it in the last few years, we are seeing account takeover fraud has increased a lot, right? And then start creating sophisticated strategies for that. The second part here is there are a ton of, and Jim talked about, right? There are a ton of third-party data sources actually available. I think the trick is how do you string them together? How do you go and start creating these set of rules? And which of these you can actually, where you can bring in more automation to make decisions versus this, for example, blocking certain transactions or stopping certain kind of applications versus where you do need your people to go and take a deeper look at that, right? So striking that balance between how much could be automated and how much needs to be manual, and then how do we use more data sources to bring the needle more towards automation. I think that is one key trick. The third part I will also add here is, I think it's a very interesting world, right? It's a world of deep fakes today. There are so many new things which are emerging, and so are new fraud patterns, right? But so are new technologies itself, right? So for example,
Yes.
when you look at check fraud, it's an issue which is increasing overall. But we have seen very interesting results looking at new techniques like image analytics to see there are obvious patterns where we can go and recognize that, and then we can start blocking these transactions. So that has helped a lot. So basically, looking at more data sources, looking at more capabilities, but the most important part is how do you orchestrate all of this together, right? So that it starts becoming much more seamless. I think those are some of the ways we have seen work very effectively for clients when they look at combating fraud.
And
Well,
Vikas,
sorry, go ahead, Corey.
yeah, I was just going to say, I mean, when we talk about the topic of the webinar, right, we're talking about trying to find value as an institution, right? When you start to look like this growing, increasing, amount of fraud that's hitting us because we're trying to become digital native and we're just not that great at it as an industry at this point, right? It's not just mitigating the fraud, right? There's a tremendous amount of time and money spent in FTEs on the backside to try to mitigate this stuff and monitor this stuff and report and file and do all these things. These are easy wins, right? You want to talk about finding singular processes or programs to try to create a project around to start to kick off your data capability. This is probably one of the first ones a bank should really be looking at. It doesn't really touch a lot of the other areas in a way that's impactful, and we could do something, right? And you start to create that muscle a little bit.
Absolutely. All right. Well, the big topic, of course, that is highly correlated with this discussion on data is the emergence of AI, generative AI, conversational AI in general. The impact of ChatGPT has been fairly clear on the market fairly quickly. Putting threads aside, it's the fastest growing, e-commerce or web application that's been to 100 million users. But the implications of artificial intelligence are being felt around the globe, with regulators having to respond to this. We're thinking about licensing and all of these things. But let's face it, one of the biggest questions around AI right now is the data access and the data that drives that. And so if you are going to go down the route of artificial intelligence-based banking support for your members or your customers, you're going to have a handle on this data, right? So maybe Jim, can you jump in initially on this? Is like when you are talking about AI to these organizations, is it still seen as something that's going to happen in the future, or are they, are executives in the space, and is the research that you're doing and that Ron's doing, for example, is that telling you that there is a rush to embrace AI and that might change things on the data front?
Somewhere in between what you just said. You gave me the option of not doing it, or are they in a rush? They're
Right.
doing something, but no, they're not in a rush.
Right.
The reality is, I think people are starting to kick the can. Again, you get into the whole situation of legacy leadership they're in a risk avoidance mode still, as they have been in their careers. You look at more modern digital banking systems, such as China, as you're well aware of, Brett. That's a risk management mentality. Smaller financial institutions now, and the biggest, are looking more at risk management than risk avoidance. That opens the door to a lot of opportunities, especially when you're talking about generative AI. I had a great interview on the Banking Transform podcast with Brian Romley, who you know very well. and everybody on the
Brian's great. Yeah.
show today probably does. Brian said, the future of generative AI is you're going to have an AI tool that's actually assigned to you. He's going to be your digital, he or she is going to be your digital answer box that continues to grow in intelligence over time, so that if you have a question, it will not just answer the question, but it'll be deploying it and answering it in the context of previous questions and previous data. And so over time, you can say, I often say my primary financial institution probably knows more about me than I even care to know, but they just don't use it. Well, generative AI is going to use it. It's going to build that engagement. It's going to make it so that, it's kind of like the concierge of the hotel. This digital concierge is going to be able to say, based on everything we know about you from the outside and inside a relationship, here's what we'd recommend for you. And they'll do it proactively. We looked 7 years ago at Bank of America and their voice generated banking system. And we thought, wow, that's kind of cool, but not really necessary.
Erica.
Every
right?
financial institution would love to have the data of every one of those conversations that went on, because they're so far ahead of the game now because of that tool that basically Erica can now answer things in a generative AI sense over time. And the financial institutions want to get there. They're tentative because of some of the risk issues. We only have to look at some of the emails we get from our financial institutions where the microtype is longer than the actual message that the financial institution is trying to send us. It's going to be done. I mean, you're not going to be able to avoid it. I mean, Ron Shevlin is already talking about the fact that it's no longer digital transformation. The whole idea of digital transformation is an old term.
Yeah, that's true.
Really deployment of AI.
Yeah. Well, I think, just even some of the data Ron's uncovered, from the pandemic in terms of changing behavior, the fact that, what is it, 80% of new account opening is done digitally now, that sort of stuff is if you haven't made that transition already, you're going to be in strife. Vikas, what about on the generative AI side? How is that being used?
I think that's, again, a very interesting topic, Brett. As you can imagine, I think community banks are not going to be the first out of the gate to start using this, but they are typically fast followers, right? The way we talk to clients, Brett, we think there are 3 generations of using generative AI. In our mind, the first generation actually is going to focus more on the efficiency side, right? So these are a lot of things which happen after you have dealt with a customer, a lot of things that you need to go and start looking at, doing a lot of documentation which exists. So you have to ingest a lot of new documents. This is where the first application is going to be, because this technology is new, right? There are a lot of governance implications of that. So that's why you want to use it more on the back office side first. The second generation, which we tell clients, is going to be when we can start using it to basically assist your frontline representatives, right? So think of it as a rep assist, staff assist, agent assist kind of capabilities, where it's human who is actually making the decisions, but the recommendations are coming in, and Jim talked about, right? Looking at all the data, can they recommend that this might be something which you need to talk to the customer about? And then the third generation is going to be where we actually let this go and start talking to the customer directly. But I do think that safely is at least, I would say, 18 to 24 months away, because that would require a level of sophistication and level of governance which doesn't exist yet, right? A lot of community banks have started becoming more comfortable with, say, machine learning techniques, but Gen AI is a different ballgame altogether. And then the second part, which I think while there's a lot of dialogue around it, which people also miss sometimes, is the cost implications of that. Right? Running these large language models is very, very expensive. You want to basically use it very selectively on areas which create maximum impact for you, where the business case is
I'm surprised that there hasn't been more of a community-based approach to that, with the community banks coming together and particularly the credit unions coming together to share those costs of building these large data models, because that's something that I think conceptually, especially for credit unions, because they don't feel like they're competitive in the same way banks think about that space. And yet, there's a few exceptions to that, such as Alloy Labs and Kasasa and so forth, but it's fairly rare for these organizations to come together from an infrastructure perspective. But Corey, let's maybe jump into the design sensibilities, because you are, of the players on the space here, you're always thinking about these new design parameters, what you can do to have a bit of an edge. And when we talk about AI, and the implications for customers, the most immediate, I think, broader implication for the bank account itself is being able to have a bank account that is highly responsive to your needs as an individual customer, whether that's as a SME or as a consumer, that it would be able to anticipate your needs for access to credit, or, how you should need to execute on a payment, and be able to, that's the generative AI I see. It's not Mid-Journey and
Right.
doing fake news stuff. It's the ability for your bank account to know, based on behavioral understanding of your responses to money situations and so forth, the geographical constraints, behavioral triggers and stuff, to come in and say, oh, by the way, here's a solution to that. Yeah.
Before you know
absolutely.
it, by the way, Brett.
Sorry?
Yeah.
Before you know it.
Yeah, true.
That should be the point, right? Is it should be before we know it, right? It should be kind of that advisor to us. And I see it as a critical part of community banking in general, financial services as a whole as well. But we have to start changing the way we have that conversation around being an advisor, right? And that's kind of how we see the utilization of AI in the future. To your point, right, Brett? I want to be able to tell someone, hey, look, if you're a small business, banking with locality, I want you to be able to look in your bank account and almost be able to predict, when you're going to need additional cash flow, or to be able to articulate a proper budget as a business for the next year without putting a lot of effort into it. And so, yeah, a lot of the foundation, a lot of the systems we've put in place, a lot of the decisions we've made with partners that we selected at the beginning had nothing to do with what we already launched. It had everything to do with setting ourselves up to build into these things. And we talk to partners daily. I mean, this was actually the topic of conversation for about 3 hours yesterday. So the panel knows I'm here in Nashville at an American Banker Conference for small biz. And there was a number of us. I was the only banker. There were several tech companies in the conversation. And we were talking about, how do we get this data? How do we put it into a form that is useful for the customer? And do we need it all centralized into a single platform? Do we need to go with one of the companies that can do that? Or do we already have the data needed to make that model for the customer on these separate systems that are already in here? We just need to put it together into a dashboard or a report or a statement or whatever it may be. Or even better, maybe a phone call, maybe an email, maybe a text message that can be generated, right, without us having to manually do some of these things. We want to get into those spaces, but again, it all starts for us in not just understanding how do we go do it, but understanding what we're doing it for. And so a lot of the things that we're, I guess, prefacing before we really push hard is we're sitting down and talking. We're focused on local businesses, right? So really small business. So from about $1 million in revenue to about $50 million revenue today. And, as we continue to grow in asset size, we'll take on larger businesses as well. But at the heart of what we're wanting to do is enable our local businesses to thrive, right? And so in order to do that, we don't want to make the assumption that we know best how to produce that for them. And so we're sitting down with specific key
You want to be
industries.
responsive to their needs. Yeah.
100%. We want to sit down with specific industries. For us, it's attorney accounts, lawyer trusts type relationships. It's property management companies. It's dental clinics. It's medical clinics. It's these really key areas in our markets that are huge industries that have a lot of complexity that we can solve very simply with some of these capabilities. And so we're pushing on that. But to be honest with you, what we're looking with AI right now is more, again, on the almost like on the data side, where it's more risk and compliance. I think it's reviewing policies. Chris Nichols talked about this I think like 2 years ago, about using ChatGPT or some sort of source like that. And I know they use that now internally to just review policies. And again, it comes back to saving time and money. That's huge, right? If I don't have to spend hours trying to understand that my policy is compliant with new changes, that's a big advantage. We can spend more time sitting down and talking to our customers, or looking through the data, or understanding what that next build is. But I'm not going to sit here and say we have it locked down just yet.
But you're
But I'm
trying.
going to tell you, man, I'm building it.
Yeah.
I'm doing it.
All right, good.
It's going to be there, and
Fantastic.
we'll let the market tell us if it was the right one.
All right, so we're running out of time, guys. But Becky, I want to get your final comment, and then Vikas, leave you to give us a little bit more information about EXL before we go. So, Becky, AI in the credit union space.
So I think that when you talk about AI and emerging technologies, so I'm a decentralized fan, and I can't talk about emerging technologies without talking about DLT.
Right.
And I think that AI and DLT go hand in hand, especially as it relates to the unprecedented capability for fraud detection and stopping bad actors from doing bad things. Because when it's all on chain, everything can be seen all the way from the very origins. There was a Wall Street Journal article today specifically about how terrorist organizations were using the cryptocurrency rails to move money around. And the amazing thing about that, while as scary as that might be, and most people go, well, crypto is bad, right? Well, let's really look at what happened. What really happened is in a matter of minutes or hours, the good guys, the white hat guys, were able to see the flow of money from one place to another once they started looking. And
theoretically roll back transactions and so forth, right?
Yes. So now let's put AI on that. And what did we just talk about earlier? How payments is going to be the focus of everybody in the future. That's why they want a bank account, right? To facilitate payments. Or otherwise, they'll use something that looks like a bank account because it facilitates payments. When in a Venmo account, Jim, you were mentioning that now that money is just sitting in a centralized organization that Venmo owns, right? So now we're back to custodial, money. I don't own it. Anyway, so I think that we talked about leadership. We talked about getting started. You don't have to do it yourself. You can use a vendor who's an expert at these things, but it takes leadership eventually. And don't be afraid of emerging technologies. So that's
Awesome.
what I got about all of this today.
Fantastic. Well, I will ask Vikas to jump in here and talk with us about EXL. They've sponsored this webinar, so it's a nice opportunity to hear from them about how they can help with these problems. Vikas, please take us through your value prop in the next few minutes.
Thank you, Brett. So team, we are a company which is focused on providing analytic solutions to banks and financial institutions here. We are a mid-sized company, have a decent team members around 7,000 of data scientists with us. And we basically, our clients love us, as you can see in a lot of the surveys and a lot of NPS surveys that we do with clients. We primarily focus on two things. We can help you grow your top line, whether it is in terms of acquiring new members, using both traditional and digital channels, whether doing more cross-sell or whether improving your customer experience. Or we can help you improve your bottom line, which means helping you basically create better fraud strategies, better credit strategies, or even helping you with regulatory compliance. So if you have an analytics need, please don't hesitate to reach back to us. The website is there at the bottom, www.exlservice.com.
Fantastic. Well, perfect timing. So thank you all. We will circulate the link to this webinar if you'd like to share it with others that weren't able to attend today. But we're certainly very grateful for EXL's support of the webinar. And I'm very grateful to all of the panelists who join us today. So please join me in giving my thanks to Jim Marous, Lindsay Ogun, Vikas Sharma, Becky Reed, and Corey LeBlanc for joining us on this webinar today. Thank you all.
Thanks for having us, guys.
Yeah, and I will say, I'm sure everyone as panelists on this would welcome this. If you have some questions that we didn't get to offline, feel free to ping them on LinkedIn or social and continue the conversation, because this is definitely a conversation we could do with having on an ongoing basis. But that's it for the webinar. Thank you all for joining us, and we'll be back with more goodness later. Stay in touch.